We're up and running. I'm getting a message here from YouTube that we're not receiving enough video feed to maintain smooth streaming. If you guys are experiencing video or audio difficulties, be patient. Um, I'm not sure if it's a bad connection or if YouTube's having something on their side. But if it gets choppy, it gets weird. Let me know in the chat there in the thread. If I got to reboot, I got to reboot. Hopefully, we'll be okay. Right. Welcome to a Monday morning, guys. We get up at this ungodly hour. It's choppy. It's slow. There's something going on. We get up at this ungodly hour because we want to trade. So we're going to look at some different markets. I got some comments already on some pairs to look at. Here's the risk disclaimer. You guys know the drill. I don't trade your stuff. You don't trade my stuff. Your mouse, my mouse is my mouse. We're good. Traders are responsible for their own trading, and this webinar is for educational purposes and for the exclusive use of our members like you. Couple items of business. Note, boy, this choppy. We got basic trading tonight at 7 p.m. and advanced trading Tuesday night at 7 p.m. And hopefully we've got better connection then than we do right now. Again, I'm not sure if that's my side. I don't have a lot of applications open. I have another web page open that seems to be running smooth. Anyway, we'll see what happens. So this is the weekly schedule for the week this week. We have also, I have a good handful of you guys that have people that have expressed interest in joining the reach out to them today if you would and let them know. I'm happy to have them get a hold of me and have a conversation with me so we can get them on board. I'm going to be changing the price structure beginning November 1st. So on November 1st, we go from $775 for the Origin Training Program to the $890 price. Also, the annual renewal for those that have that coming up or you haven't done it yet. It's been $275. That will go to $375 on November 1st. So these little sales tactics of lowering price or discount or something, that's all going to go away on November 1st. So if you got people that are interested and want to get in here, now's the time to do it. Have them get a hold of me. If you need my phone number, reach out to me, direct message, and I'll get that to you. What the heck? 801-717-6653. Text me. Text me with the name of the person that's interested and their contact information, and they and I can have a conversation. All right? Cool. Couple big things going on this week. We got a super opening. On Wednesday, we've got lots of stuff. You've got ADP non-farm, which is probably not going to be the biggest mover on the day. It's something the market will look at. Advanced GDP. Now, I mentioned to you guys a month ago, the Fed came out and pretty much said growth is their main indicator for what they're going to do with interest rates and the interest rate decision and their monetary policy decision. So that's going to be an important number. They're expecting a forecast below their previous. So they're expecting a 1.6 number. So slower growth is what's anticipated. Let's see what actually happens. The market's going to react pretty good to that number there. Canada has a bank statement coming out on Wednesday, 8 a.m. U.S. has theirs Wednesday at 12 p.m. This is all Mountain Standard Times, guys. 12 p.m. Mountain Standard on Wednesday. And then the Bank of Japan is doing their nonsense on the 30th, later on that night. So a big, big Wednesday in store. Now, here's the question on FOMC. What are the chances they're going to raise rates? And how much do you think they're going to raise them? Well, there's a way to know and not really guess. If you go to Google this in your little Google box, CME FedWatch tool. If you throw this little thing in there, it takes you to a neat little website. Notice we got 2 days, 5 hours, and 53 minutes for the announcement. If you scroll down a bit, you've got this little math problem. where it says here's our current target rate of 175 to 200. Right? That 175 to 200 basis points. And that's this little thing right down here. This little, I call it checkered, I guess. There's a 5.9% chance that we stay right where we're at. There's a 94.1% chance that we have a 0.25 rate cut. 94.1% chance, which means it's going to happen, which also means it's kind of been priced in. I would say it's probably mostly been priced in. Because we've known this for a while, that chances are pretty good they're going to cut. Now, we could look into the future and say, okay, that's neat. What about December's meeting? What are they going to do then? They'll pat with this cut that they're doing right now. So typically speaking, what happens when a central bank cuts their interest rate? Well, what's supposed to happen is a lowered value in the underlying currency that's being talked about. So in this case here, you expect the dollar to get weak on Wednesday. We'll see. The last several of these announcements, you guys that have been trading it with me and been on there and been watching it yourself, have noticed that the announcement comes out on a rate cut or some kind of decision, and the doggone market does the exact opposite, at least initially, does the exact opposite of what we would expect it to do. So, welcome to trading. And this is why we're investors more than we are traders. Right? All right, cool. Hey, let's look at some currency pairs. All that in mind, Wednesday's a big day. I'll see if I can't get myself into a situation where we can broadcast or be available around that time, so we can jump on together and see if we can't trade. I gotta check my schedule to make sure that would work. But I'm sure if I asked by raise of hands who would be interested in doing that, you'd all say yes. But I gotta make sure my schedule works for that. Let's try to do something on Wednesday to prep for that FOMC announcement. Cool? Done. All right, take a quick look at the Euro USD. Heikin Ashi on the 4-hour chart is something I look at a lot on trend. So there's 3 parts of analysis that I do every time I look at a chart. I do support and resistance. I do trend and general market direction and where I think the market is going or likely going next. And I do overbought and oversold. So looking at this right now, if we just looked at trend, we've been coming down for the last several days here, and you can see that in the Heikin Ashi. Nice candlesticks. If I blew this up a little bit. A little bit of pullback, bearish again. So we've had this pullback here in price. What's interesting is this pullback in price has not been significant enough, at least not yet, to produce a change in my Heikin Ashi direction. Although I am seeing, if I was to blow this up a little bit, I guess it doesn't work that way. I am starting to see change in my bodies just a little bit bigger wick here on my Heikin Ashi. It's a little bit smaller body here towards the end. So I feel like I've gotten a pullback. If I'm a bear on this currency pair, if I'm trading bearish, I really feel like now's the time to probably consider getting back in for another short trade, at least to retest these lows. If I just open this up a little bit and blow it up. See, what is a bearish market? Bearish market is lower lows, lower highs, lower lows, lower highs, lower lows, lower. So we have a lower high that's actually testing some structure from over here. If I was to draw a little line, see these lows I generated? That's generating a little bit of this spot here that we've come up and retested. Now the anticipate, if this is going to keep being bearish, the anticipation is this needs to be going down to make a new lower low. So the bearish play, at least temporarily, is maybe to get a 22 pip trade short in here as a scalp, I think, in a minimum. Trade 22 pips short. If you want to be a little more aggressive, you could go to this low right here. And this low on this candlestick 1073. We're at 1100 right now, so that's about 27 pips. You're not too far off. So there's a 22 pip trade to go to sell right now if you're going to use the ATR or the average true range. There's a 27 pip trade if you're just going to try to retest this low right here that was established. And there's a good Fibonacci trade if you were to slap a fib in here to go to the extensional. When we draw Fibonacci, it's really simple. In a bearish Fibonacci, we always draw from the high point down to the low point. We've come up here to right now. We've been messing with our line in the sand on this one. When you mess with the line in the sand, you don't really anticipate a move to your extensional. You're more looking at a retest of this low right here. So I think that's probably the most, in my mind, if I was to do this, the most popular play in my mind would be just to retest that low. Right? But if we want to be a little more aggressive, if we have some confidence in this direction, the extensional down here is at 1060. So that's a 40 pip trade. So 3 different options for your trade here. Go for the ATR, which is 22 pips, sell off of this, make your 22 pips down, or just retest this low. That'd be a 27 pip trade. Or try to go down here to your extensional. That'd be a 40 pip trade. If you're doing your 40 pip trade, I would enjoy seeing you put a trailing stop, or at least a stop, once you've made enough. Even if, let's just say you make your 22 pips. You get 22 pips up on this trade. Go ahead and jam a stop at your sell price here. So let's go ahead and place this trade just so you can see what I'm talking about. We use a smaller law, and I'm going to go to the extensional. Let's do a 0.15 on this one. Here's my trade. Now, again, I'm going to go to the extensional, which I believe, did we not say that was 110.60? About a 40 pip trade. No stop loss. Actually, you know what? I'm going to put a stop loss in, but it's going to be ginormous. The reason I'm doing this is just so I can see, once I do the trailing stop, this is going to turn yellow for me here. You'll see that here in a second. So I've got this take profit in mind. I'm going to do a trailing stop on this trade. Let's go ahead and let's shrink this window down. There we go. I'm going to do a trailing stop on this one. So if I right click on the trade and go to trailing stop, again, I like to do, personally, I like trailing stops that are at least as much as my 4-hour chart ATR, which in this case is 22 pips. So if I go here to custom, $220. Notice how this turns yellow now. When this turns yellow, telling me that I've got a trailing stop on the trade. So there's at least a scalp in play right now. I don't know if this is I guess you could consider this a swing trade maybe. 40 pips. Right now, maybe that is a swing trade on the Euro USD. Little 40 pip swing trade. Now that's in the near term. That's what's going on, right now. Over the bigger picture, this is a daily chart that we have over here. We drew this last week. What we said is we connected some highs together. We saw a reversal point here. Maybe we have this upper channel. We certainly have this collection of lows here. So we feel like overall, this bigger cascading down thing happening since June of this year. Big move up. Now we looked left last week, did we not? We looked left and said when we have big moves up, recently, as we've had big moves up, we've seen retracement of those moves. Big move up, retracement. Big move up, kind of, retracement. Big move up, retracement. Move up, retracement. Move up, retracement. So that's been happening in the recent past. It doesn't mean it has to happen now, but is it reasonable to assume that we could have some kind of pullback. Well, we've gotten that. If any of you got in on this sell off of this, you're in good shape. Some of you just had open position. Some of you had open trades like I do. I've got this big fat open trade that's still sitting down here collecting a nice swap fee. What is the swap fee on that right now? My swap fee on Euro USD on this one, I'm up to $335. And I'm just going to sit in it. I have no worries. If this thing keeps coming down and eventually hits this area, I'll close this out. I'll make money on the swap. I might make a little bit of money on the pips. We'll be in good shape. If this starts to go up, which we'll talk about here in a second, if this starts to go up, I'm fine with this being open. This trade here is a different trade for me. This is a carry trade. A carry trade, in my mind, I really don't have a date in mind for when I would want to close out of it or be done with the trade. This thing can stay open as long as it wants to. I'm making a pretty good little rate of return on the swap fee. So I'm good with it. I feel like, now, again, we talked about this last week. We talked about this last week. What about this trade here? At what point do I need to say, hey, you know what? Maybe I need to do something about this. I would say you asked the question, is it reasonable to assume that we could come down into this area at some point in the future? We could come back to this trade. Do I have technical reasons? Do I have fundamental reasons? If you watch the advanced training from last week, I go through those. It's either advanced or basic. I can't remember. I think it was advanced. But, fundamentally, I know we're cutting rates this Wednesday. But as far as an economy goes, there's not a better economy on earth than the U.S. economy right now. There's really no reason to panic about any kind of recession. I think the nerves are being tempered on that quite a bit. There's reason to be positive about the U.S. dollar, especially if they can get a trade deal worked out and get that resolved. And I think Trump's going to be more anxious to get that done as his reelection comes up. Of course, who knows what's going on through his head. But I'd imagine if I was in his shoes, I would like to see a trade deal done within the next couple of months or so before I start to campaign and get on that trail. Or maybe he's got a trick up his sleeve. I don't know. There's just reasons to be positive about the dollar. And there's bad news that's going to come in. Maybe we have a bad GDP this Wednesday or something. There's things like that are going to happen. But comparatively speaking to other countries and other currencies, it's strong. Euro, on the other hand, a lot of this move up was positive reaction to the fact that, hey, maybe this whole Brexit nonsense that's been going on for so long now is finally coming to an end and we can move on. My thought process is that's nice. Hopefully that does happen in the next couple of months. Looks like. Thanks, Boris. Thank you, Britain Parliament. But the thing of it is, long term, is it really a good thing that one of your biggest, probably your biggest participant in the European Union, aside from Germany, is walking out the door? I think that promotes a little more to instability than stability if you're the European Union. And some question marks. Their economies aren't doing the best. So anyway, I just, they cut rates by 0.5. They're in negative interest rate territory. They could very likely cut again. They have a new central bank leader. I'd like to see what her philosophy is, or their philosophy is, first before we make too much determination. But from a fundamental standpoint, what I'm trying to say, from a fundamental standpoint, there's reason to believe that we could very easily come back into this area at some future. So why am I going to cut? Why would I cut bait? Right? Let's just go ahead and keep this trade in here. Now, if I come up and I break this upper boundary, I'm a chess player, guys. We're all chess players. We're thinking several moves ahead. That's why I have this drawn up here. If this happens, if we get some kind of, maybe we move down one more time, get a little bit more, we can take this trade out. Maybe we could even come into here if we wanted to. Because your Fibonacci, if you drop from low to high, your retracements are still down here in this area. So we could still come down into here before we maybe get a bounce and then start to come up if this is going to be some kind of new bullish move. All right. If that's the case, if this is some kind of new bullish thing that's going on with Euro USD for whatever reason, after this move up happens and I break this upper level, I'm looking at my next pullback, and this could be weeks away, guys. Excuse me. This could be literally weeks away. I look for this next pullback. When I get it and I see buying opportunity, I'll fib that too. See if I go over here, if I get rid of all this stuff. Get rid of this one too. What's my indicator? Fib extensions, close it out. Oh, oops, sorry. Delete it. Just to clean this up. So what if I made this gray move here? This gray line that I have drawn, we come up here and then get a pullback. Let's Fibonacci that thing. Yep, so when I pull back into this zone into here, if this happens and then this happens, my next play is to buy here against this trade here with the intention of it going up to an extensional. So right now there's nothing to do. I would really enjoy it if this thing just continued to go south and continue to come down into this area. But I don't know what's going to happen. I just have to have a plan for either direction. And that's my plan. This right here, could take a while to develop. Like I said, it could take weeks. Come up, break this area, get a pullback off of that, and then I make a decision down the line. So we'll keep an eye on all that. Right now, I'm relying on this upper boundary to hold for me. Now, if you're a bull, now maybe you're fundamentally, for whatever reasons, you have inside information, you're a bull on Euro USD. Well, if you're bullish on Euro USD, you are in the 3-point stance right now, getting ready to buy. If you haven't bought already, you're getting ready to buy because you've made your move up, you've had this retracement come down, and now you're looking for the extensional. So let's draw that. Fibonacci, bottom, up to top. You're at or near your first retracement zone right in here. So if you're bullish on this, you're buying now and you're heading up towards your extensional around 112.50. Personally, I'm not. And I'm not interested in carrying the swap fee on this thing either. But both could happen. You've got the sell trade that we just did today. That could totally take profit. And then this bullish move happens. I could see it. I'd imagine I'm oversold on probably a weekly. Notice I have 5 or 6 days. Let's blow this up just a little bit. I have 5 or 6 days of down. 1, 2, 3, 4, 5, 6. So about a week of down. So that means I'm starting to get oversold conditions on my weekly chart. This is just probably probably about halfway through a downward cycle on a weekly chart is what I'm trying to say. So in another 4 or 5 days, we'll be really oversold, I think, on a weekly chart, getting ready to buy back up. So we'll see where we're at. I'm really interested in what happens with with the FOMC this Wednesday. So on Wednesday morning, let's revisit Euro USD and let's draw some support. Let's see where we're at. Let's see where prices wandered off to. And then Wednesday morning, let's look at some support and resistance and make a plan for what we're going to do with this FOMC announcement that's coming out. All right, that's Euro USD. I've got some requests to look at the USD JPY. Let's go pull that up. Don't know if you know this or not, guys, but you can put these in alphabetical order. It's a little bit of work. It's a pain in the butt. What you have to do is you come over here to your market watch and you just drag these. So you can highlight this Euro Canada. You can drag it wherever you want to drag it. I've got these in order of currency organization. So I've got my euros first, then my pounds, then my Aussie, then my New Zealand, then my US. Don't know why Aussie dollar can't be traded right now. That's interesting. All right, so anyway, I've got these. You can organize those. If I close this out, if I go back over here, let's get this out of the way. Let's go to USD/JPY really quick. That's going to bug me. All right, very clean charts here. So let's go ahead and analyze this together. Now, you might want to pause the video at this moment here. Let me change this up. Do a Heikin Ashi. Pause the video for a second and answer these 3 questions. Number 1, what is the general trend or direction of the market as it exists right now? Number 2, based on trend, overbought and oversold conditions, and support and resistance, where do you think it's likely going next? And number 3, what's your trade? What's your trade? Are you going to scalp a short move? Are you looking to swing a bigger move? Look at that for a second and tell me those 3 things. All right, starting with trend. Notice my Heikin Ashi. Notice my trend line. Price is above my trend line on my 4-hour chart. That's bullish. I've also got some bullish Heikin Ashi going on here, right? Blue bars, that means I am bullish. I'm going up. It's been doing that for a while. You'd imagine, where's my retracement of this move? Well, we haven't seen it just yet. We're still bullish. Right? So we could draw a bullish trade plan. Longer term, see this move right here on the 4-hour chart is this move here on the daily. So let's take a look at that move. Here's the bottom of the move. Oops, sorry. Here's the bottom of the move. Here's the top of the move. Probably that red jar right there. So we would say, hey, we would anticipate at some point maybe a more broader retracement into this zone in here. We could, or it could just kind of hang out. Maybe FOMC does this to the US yen on Wednesday, and then we're more prepared for a broader move up to our extensional. Notice this previous high right here. That's a reversal point. That's the highest spot this thing reached. Wouldn't mind taking a little line and slapping it right there. Notice I got this neat little zone. This high here corresponding with this extensional. Guess what my bullish target is, people? Right there, 109.40 range. So now I just need a reason to get in on this. Give me a reason to get in. Okay, so I just got a text message from someone that's listening in on the webinar. If you have people that are wanting to get into the group, the best way to do it is not to have them call me. They could text me at 801-717-6653. I'll put it here in the thread. Have them say, hey, my name is so-and-so. I'm referred by so-and-so. I'm interested in joining your group. And then I can reach out to them and have a conversation. All right? So that's the best way to do it. If they try to call me, I just don't take calls. My ringer's off. I've got other things I'm doing. But I'll check my texts throughout the day. The best way to get a hold of me is through Slack, but they don't have Slack. So anyway. All right, daily chart. So this is kind of the more broad, if we're bullish on this, which it looks like we should be, the more broad trade plan here. And if you were listening to Patriot would say, hey, we've had this move up. Here's our consolidation of that move. And if we're looking left at more broad structure, which I'm not sure what we have, probably a nice, look at this low here. This is kind of off a little bit, but I've got a low and a high working here. See if I got this high here. I'm probably dealing with something like that. 110.50. So 109.40 or 50 here, and then 110.50 up here as an even more broad target. So if you get your pullback here, if you get your pullback into this area, you get into this zone and you start to see buy signal, you're probably buying it and going up to this extensional if you're a bull. If you keep drifting here and you start feeling like you have, maybe you want to get in now on a position. I think your target probably needs to be this 1050 that's up here. And then once we get into these spots, of course, we hit resistance. We always see some kind of pullback. Not always. We typically see some kind of a pullback off of that zone. So there's your trade plan for US dollar. Right? Someone's going to ask, well, could I do this short trade? I guess. What if you're bearish on US yen? Well, if you're bearish, for whatever reason, if you're bearish on US yen, you should be selling this consolidation at least into the retracement zone. If you're conservative and you're bearish on this pair for whatever reason, you need to break your trend line first before you start doing stuff. This price needs to come down below, and maybe the FOMC on Wednesday is your catalyst to do that. FOMC, dollar's supposed to get weak. So you can see this come down, and then you're looking for your next retracement to sell off of that. I'm not convinced there's a good reason to be bearish on US yen. Right? There's your play. Keep taking your dailies because you're going to have daily pivots or daily ATRs. Whatever your daily scalp strategy is, continue to take it. I'd imagine if we kind of stay at this spot, we're probably going to have a daily trade to buy this afternoon. So you go ahead and take that. Gold. We'll take a peek at gold. Gold, my personal play on gold is a very, very long-term play. And I can draw it out here for you. So I was a negative on this. Here's my sell position on gold. And you can see I've been in this for a long time. I've been in this basically since April, May. I'd say May because I got into it and then it did this. Thank you, trade war. So now you ask yourself the question, well, from this low up to this giant move up, where's the retracement levels? Where are the retracement levels? Right in here into this zone. I've been hedging and stuff like that through here. I'm kind of waiting for this to happen. I'm certainly going to need a trade war catalyst to make that happen. I would love to see a more broader retracement. Even have this thing come down into this area. And eventually do something like that. Now, there are people like the Goldman Sachses of the world that are expecting gold to go to 1,600, but that's underlying that is the assumption that this trade war is going to keep dragging out, that both sides have drawn some lines in the sand that they just can't get over. You're not hearing that vibe, though, from Washington. You're hearing that there's progress being made. This phase 1 deal is really close to being done. Then they move on to phase 2. Whatever. It's all just noise to me. I'm looking at this and I'm saying, generally speaking, once they get something done, the market's going to react emotionally to it, and we're likely going to pull back down into these retracement zones. When we get into there, I might consider some more broader hedges. Probably a light hedge or a soft hedge. So for instance, I've got 0.15. Let's just consider just one trade. I've got a 0.15 sell trade here on gold. If I get back into this zone in here, I'm considering probably a half of that. So probably a 0.07 or a 0.08 buy trade down in here that's going to run up and try to retest these highs up in here. Because again, what's the thought process? If we're looking at Fibonacci theory says if we trace into this zone and we hold, eventually we're going up to our extensional. Or if we come down and hit this 618 retracement or this line in the sand, we're going to be going up from there and retesting these highs that we established at 1540. So that'd be probably my play, would be to buy in here on a soft hedge. So I'm not hedging fully. It's a soft hedge trying to go up. How I'd play that is I'd get into a soft hedge here as it goes up. That's interesting to me as I see my first retracement and then a possible signal for continuation. I get more fully hedged at this spot with the intention of taking that full hedge up towards my extensional. Yeah, Pipsqueak's got it. This Hong Kong thing's got a political dimension thrown into this. It makes it difficult. I think the market's really looking at this trade war and in the Hong Kong situation too, and saying gold just needs to be elevated until this thing gets resolved. So, look, I'm in no hurry. I'm not getting charged a huge swap or anything. I'm in no hurry on this. Once this market comes all the way back down here, I've got these fat orders with big losses on them. You've seen them. I'm upside down 1,800 on this trade, 3,100 on this trade. I could absolutely care less. I'm expecting at some point we could come down. Now, what if we don't? I'm a chess player, right? We're all chess players. What if we start to make a move and we break above this area? Well, I can tell you right now, my first pullback that I get and any kind of a buy signal, I'm fully hedging and I'm going up to my extensional at 1,600. So that's, and I expect this more than I would anticipate this happening. But I've got a plan for either direction. If I make a break above, where's my first pullback? I'm going to 1,600. If I come down, there's nothing to do except maybe a soft hedge eventually inside this retracement zone. I like it. Look at your, there's a lot of stuff here, I know. Look at your highs connected to each other. Cascading highs downward. Let's change this line so it's different than the others. Make this a red. Cascading lows corresponding with it. I'm going to leave this up for gold. And you're always taking your daily. Inside of that, that's my broader plan. Inside of this, every day I'm looking at my, my daily scalp. Taking $2 or $3 out of a movement, which is pretty good for gold. $2 or $3 out of a movement every day on some kind of ATR trade, or maybe maybe I've got an oscillator I'm looking at that's oversold or overbought with the right signal, and I'm just going to grab a scalp. This is more my broader trade plan for what I'm doing long term and swing trade. Right? I think there is an argument to be made. We are at this upper part of this channel. There's an argument to be made for selling gold and trying to come down here. I'm already leveraged pretty good to the sell side here. I'm not really interested right now anyway in adding to my sell position. So I'm going to sit on my hands. I'll trade other stuff. Right? Euro New Zealand. Love me some Euro New Zealand. Up, down, up, down. What's this? What kind of market is this? Jeez, that's one thing. MT4 is just not upper boundary. Kind of a lower boundary. What's that? Three types of markets. Trending up, trending down, or sideways, consolidating, range bound, right? This is range look to me. We're just at the bottom, we've come up. Now, personally, I love to sell the Euro New Zealand because I make a pretty good swap fee. Let's look at what that is right now. Hold on 1 second. Give me 10 seconds for a cough break. Where's my mute button? Hold on. I'm really hoping that mute button worked. Okay. Sweet. So, what were we saying? Oh, I love trading the Euro New Zealand short because I make a swap fee on it. It's a carry trade for me. So Euro New Zealand, let's take a peek here. If we right click on, so you go into your market watch screen, right click on the pair you're interested in, specification, and you scroll down to see, okay, if I'm in a swap long or I'm in a long trade, I'm getting charged 13 points a day just for being in the trade. If I'm in a short trade, swap short, I get paid. It's a positive number, 5.1 pips a day. So if I'm trading $1 a pip, I'd be losing $13 a day on the swap for being on the trade. If I was long, if I was short and selling, I'd be making over $5 a day just for sitting on the position. Right? So I like it. Someone could try to fib this thing and say, hey, I've got a high here. But you see, you're not in a trending market. That's the only problem. But I've got a high here down to a low, and I'm at my retracement zone. So if you're born in the wool, whatever the phrase is, dyed true blue bear on this tried and true bear, boy, too early for analogies or whatever. You're selling this thing. You're selling it now, aren't you? You've hit your retracement zones. What is there to talk about? You go to your retracement, you're selling off back at least into this, lower floor, but your extensional is not too far off of that zone. You're doing something like this. Now I gotta fix my line again. Go back to yellow. Right? You know you're overbought. How do I know I'm overbought? For 3 days, I've been going up. What does that mean? If I've been going up for 3 days, and there's 3 candles in a cycle, I'm overbought on the daily, aren't I? On my oscillators. So you have an overbought condition. For 3 days you've been going up. Nice little pullback. You've pulled back into your retracement zone. This is a sell going down into this spot down in here. Now if you can just get the fundamentals to help you out, get some bad Euro news somehow, some positive New Zealand news from somewhere, somehow. Maybe dairy prices go up. I don't know, something. That's the play. Now I teach directional bias, meaning I really like the concept of having you guys choose a direction on a pair. Like for instance, you're in New Zealand. I am bearish. I'm probably eternally bearish. Not eternally. Nothing's ever forever. But I mean, if you do that, choose a directional bias and just pick a direction to trade in. That's the Owanda way, first of all. But it takes a lot of the pressure off. I'm not trying to buy and sell and buy and sell and wonder when to do both. I'm just doing one. And I've shown you guys this before. If you pick any pair, and look at it over a period of time, and you say to yourself, through this area through here, if I was, this is a horrible example, but if I was bearish and bullish through here, bearish or bull, if I just picked one, if you were bearish, looking at this chart right here, get back into this zone, you made money. You made money through this zone in here because you were selling when you were bearish, selling when you were bearish. You might even have sold some of these retracement zones up here. Maybe you got into some sell trades because you felt like you were topped out. You started to retrace. Maybe you wanted to take a chance on a broader retracement down. I'm not sure, but if all you did was sell through this zone, you made money, especially through here. Maybe you slowed down. Maybe you didn't sell so much. Maybe you did nothing. You just sat on your hands through this spot because you were bullish. And you sat on your hands mostly through here. You might have gotten into a bearish trade over here. It went against you, but eventually it worked out. You just picked a direction. If you were bearish through this entire process here, you made money. Flip it around. If you were bullish, you made money. You bought when you were in an upward market. When the market went bearish, you sat on your hands. You did nothing. Or maybe you felt like you had a 3-week cycle down or a 3-day cycle. This is a 30-minute chart. Maybe you had a 3-day cycle down, and you're like, okay, it's time to buy because I've been going down for 3 or 4 days now, and usually you get some kind of retracement off of that. So you bought at one of these lower spots, or you bought again when you started to get bullish over here. You start to break above your trend line. This is all bullish, and now you're back to buying again. If you did nothing but buy when you were supposed to buy, oversold, upward market, hitting support, you made money. Isn't that interesting? You could have been bearish on this thing and made money. You could have been bullish on this thing and made money just by picking a direction. So I'm kind of doing the same thing here. I'm trading, not kind of, I am. I'm saying on Euro New Zealand, I am only a bear. I only like to sell this thing. I don't like to buy it. Part of that is I use market managed. If I'm in a buy trade for a long time, I'm collecting a swap fee, or I'm getting charged a swap fee that's pretty hefty. I don't want to experience that, so I just stay away from that. So guess what I'm doing? I get 3 or 4 or 5 days of up, I'm selling it. 3 or 4 or 5 or 6 days of up, I'm selling it. 2 or 3 or 4 up, I'm selling it. I'm selling it. And I'm making money over and over again. If I happen to be bullish, I'd be doing the same thing. 3 or 4 or 5 days of bearishness, I'm buying it. Come up, 3 or 4 or 5 days of bearishness, hit support, I'm buying it. Oversold. You got to imagine oversold condition, oversold condition, oversold, oversold, oversold. So, some bull on Euro New Zealand is making their money right now. And when they're done, the bears will come in and they'll make their money. Make sense? So directional bias. Pick a team. I could say that about any pair. What's our next pair? Let's have a look at Euro Aussie. These are ones I don't really trade that much. Euro Aussie. Oh, really? That's my Euro Aussie? Oh, that's Euro Yen. Euro Aussie. Here we go. Ooh, some consolidation there. Let's get rid of this terminal. Right now, kind of, oh, it's a 30-minute chart. Kind of bearish, isn't it? Let's Heikin-Ashi this thing up. You got some bearish hikes right now, so rangy to hike-ish is my feel on this. Kind of a whole lot of nothing, but if I was to step back, I got a pennant thing going. See these highs? This is going to be tough to draw. Oops. I guess you've got that going on. These collection of extreme highs. Then on the bottom, you've got this kind of upward moving low thing, right? This is called a pennant. So now we're anticipating some kind of break out of this. So how do you play this? Well, in the meantime, while it's moving around, you're going to be selling the top of this and buying the bottom. You're starting to get smushed in here. Right? You're starting to get smashed in here. You're still trying to sell the tops and buy the bottoms. The next step is when you finally break out. I'm going to make these a different color too. We'll do, what's going to show up like a light green. Aquamarine. Can't go wrong with that. You break up above or you break down below. So this is how you play this one. You can wait for your breakout. Once you feel like you have a breakout of one of these zones here, look for your next pullback and you take your next opportunity to go. So look at your next pullback because that's the 5 wave, right? This would be the first wave. Here's the second. You want to get in on that third wave. Now this is a daily chart, people. This is a long-term perspective. If you want to zoom into this range here and take your dailies, I would say don't take your daily pivots and your daily, try not to trend trade in here. Instead, sell your overbought conditions and buy your oversold conditions. Sell your resistance levels and buy your support levels. because I don't feel like you're trending here. Makes sense? So change the game. Change your strategy. You get rid of your, at least for now, get rid of your trend strategies on Euro Aussie and sell the tops and buy the bottoms, man. Sell resistance, buy support. Sell overbought, buy oversold. That's what you do on that. For now, until we get a breakout. You also wanted to look at Swiss yen. The jam and jam sandwich. So what do I... Look, you can trade anything. I'm just not as interested in a Swiss yen because I have two safe haven currencies fighting each other for which one sucks the most. So it's still trend. You look at it. Does it not trend? Does it not make moves? Oh, that's CAD. Swiss yen makes moves too. Oh, this is bearish. Oh, that's a 1 hour chart. Let me get my act together, people. Let's get rid of this. Look at this and now think structure. We got a few minutes left. Think structure on this. Look at this daily. How would you build without using pivots? We could totally put weekly pivots on here and just answer questions automatically. But I want you guys to be, good, well-rounded traders. Think structure here. What's happening? Look left. Do you see tops? Do you see bottoms? Notice this kind of reversal spot here corresponding with this retracement zone. This is probably about a 38.2. You're probably hitting your near-term retracement. Yeah, close enough. Right? Still bearish in the near term, so this could still retrace some more. So there's a couple ways to play this. Either you're just dyed, if you're dyed in the wool, is that the expression? Am I butchering it? If you're just, you're pure bull, like you buy this thing and that's all you do. I don't know why, but first of all, I wonder what the swap is on this. Swiss yen, because these are both negative interest rate currencies. How are we doing on a swap on this thing? Yeah, you're getting charged on either side. It's not big though, it's small. So if you're a bull on this, you're buying this thing and you're going to your extensional. Come on, Jason. In the long term, I wonder if there's some structure to the left that corresponds with that. Let's go this here. I got this high here. I've also got this thing going. Well, MT4 sometimes can just make you want to scream. You got this high, this reversal spot that happened back in June, July, somewhere in there, corresponding with this extensional spot. So this is your near-term resistance structure. Well, not near-term. Your near-term is this high right here. This is your extensional structure. Above that, you've got these highs from early in the year, up around the 112. It looks like 111.80, 112 range, somewhere in there. So if you're buying this thing, one of these guys is your targets for longer term swing trading. That's long term. In the short term, I think you still have to sell this thing, don't you? You're still bearish. You're below your trend line. You have to take your daily scalps short. If you're trading both sides. If you're directional bias, pick a team. If you're directional bias and you're bearish, you're supposed to be selling the daily pivots right now. You're supposed to be selling the ATRs going for 24 pips off your 4-hour chart. You're supposed to be selling this. If you are a bull, you're getting ready for probably a better situation. Let's see some more consolidation first. But somewhere in this zone in here, you're getting ready to buy to go up. Right, so selling in the short term, buying in the long term is probably what you're doing here on this pair. Hey, chime in some more in the thread there, guys. If there's other currencies you want me to look at, I can do that in either advanced trading tomorrow night or maybe, Wednesday morning or Wednesday midday when we get together. We can discuss that too. But I want you drawing this stuff on your own. Get in there and look left, see some of this structure. The more you watch me do this, the more you do it yourself, the more, the better you'll get at it. It's also comforting to jump onto a webinar like this and listen to me draw mine and then have it match pretty well what you're doing. And that just gives you some confidence with what you're doing. So to grow into that spot, it takes some practice, guys. Once again, my phone number is in the thread, 801-717-6653. Have people that you have that are interested, shoot a text to me. Let's get them on board, all right? Thanks for joining me this morning, guys. We'll talk to you soon. Bye.